All right, this is pretty cool. So let me tell you a little story about a guy named Juan. Juan immigrated from Mexico. He took a $28 an hour welding job at just some small rocket company at the time in 2015. He didn't even know who Elon Musk was. They gave him $10,000 in company stock when he decided to go full-time with the company. And every single paycheck after that, he bought just a little bit more because he believed in where he was working at. He didn't sell when it got hard. He didn't sell when people said the company was going to go bankrupt and that this, space mission that Elon Musk had was going to fail. He just kept buying. Now, not anything big, not anything substantial, just little by little. And I remember an early mentor of mine always said, little things done consistently over an extended period of time turn into big things. Well, today, as of Friday, June 12th, Juan Hernandez officially became a millionaire. And he's one of 4,400 SpaceX employees who woke up this morning and changed their financial futures forever. That's the story we're going to talk about today. We're going to dive into the IPO of SpaceX and a couple of the hidden lessons in this journey as an investor, because hidden inside the SpaceX IPO is, in my opinion, one of the most powerful wealth lessons that anybody can learn that's really trying to accumulate and build wealth over an extended period of time. Not many of us have these lightning in a bottle moments. Not many of us are Elon Musk. Not many of us are going to be founders. But many of us can become the ones. And most people are looking for the opportunities that they really have right in front of them. And we're going to talk about that in today's episode. What's going on, guys? Matty A here. Welcome back to another Millionaire Mindcast. Today, we're breaking down the SpaceX IPO. This was one of the most insane IPOs, most valuable company launches of all time. And I wanted to kind of just take inventory of everything that went down today. I went out to lunch with my mom, and I was kind of, following X and seeing some of the things that were going on. And then as I really had some opportunity to dive into this, and shout out to all the sons that are still courting their moms and taking their moms out and spending time with them. I'm so grateful for my mom. My mom works in my company with me for 10 plus years now. And it's one of the greatest things that I have ever been gifted. So very big shout out to Mama A. But as I was kind of coming back to the office, unpacking a bunch of stuff, seeing what happened in the market, there was a lot of people that got rich today or richer. And these were, a lot of already wealthy people. But guess what? There was a lot of people that weren't wealthy before this that got really wealthy today as well. And I just kind of wanted to unpack a little bit of that, some of the wealth principles hiding inside some of their stories that apply to many of you, many of the individuals like myself, like you as the listener, people that we know that want a better life, that want to keep building and growing. And sometimes you think you have to be the one that does it all. And that's not always the case. So let's dive in and talk about the SpaceX IPO. So here's what went down today. SpaceX, right? SPCX I think it launched on the NASDAQ this morning. The stock opened up around $135 a share. This was highly anticipated. I think they were even delayed. And Elon gave a really cool speech too. So it was actually kind of a funny speech. He's not honestly the best public speaker. And at the same time, he's very candid, very honest, very himself. So I like authentic speakers, whether they're polished and perfect and they got the gift for gab. Yeah, I mean, those people are great too. But I oftentimes love the people that you're just like, man, that dude's a little odd, but like I like to listen to him, right? And Elon Musk is one of those people for me. So launched and opened up at $135 a share. And by late morning, it was already trading at 160, 161, up more than 19% on the very first day of trading. I think it ended up north of 20%. I could be wrong. So, do your homework, but that's not the point of this episode, right? Specifics here. This is more to talk about some of the lessons that were in this. And before we dive into that, $2.1 trillion, the seventh largest public company on earth, behind only Apple, Microsoft, Nvidia, Amazon, Google, and Saudi Aramco. Now, those are all juggernauts that move the needle of the world when it comes to commerce and business. And so to see SpaceX come onto the scene and do what it did to garner the attention, to gather the investment dollars, it just shows you how powerful the brand of Elon Musk is, and his vision and the team and the people that he put around him and in his company to make this as successful as it was. And here's my belief on this. One, he's not somebody I'm betting against. Two, space is infinite. And it's almost like, the world of capitalism and the way it has continued to expand across planet Earth and find its ways of extracting value and opportunity and capital. Of course, he's the first pioneer in space, and there's infinite opportunity in that same capacity outside of planet Earth. And he's going to be somebody, as well as SpaceX and anybody that's tied to them, that is going to pioneer and explore those opportunities as well. So investing in this opportunity, this stock, long-term macro, I think is a great opportunity. Now, short-term, I did in the last episode a little breakdown on kind of statistics and where people find themselves, pre-IPO, at IPO, pullback happening, things like that, right? And generally, price pulls back. It finds its bottom over, course of, call it 3, 6, 9 months, based on lockups expiring and people selling and taking profits and whatever's going on in the macro. And eventually it finds its bottom, and then it's going to climb, right? Where it's at today, 10 years from now, it's going to be way higher. But today may not be the best buy, right? Now, this company that almost went bankrupt 3 times in its early years, a lot of people betting against it, is now worth more than JP Morgan, Tesla, and Meta. Like, let that sink in. Like, those are not small companies when you think of, big brands and companies that move the world of capitalism. Those are household names. Now, the mainstream news is, of course, focusing on the stock price, the valuation, all the sexy, talking points that everybody wants to know about, and whether it's overpriced. And we'll get to that, because I do believe that, people should be at least eyes wide open if they're going to invest in opportunities. And again, I'm no financial expert, but I've got an opinion, so I'm going to say it. The part of this story that really fired me up this morning, and as I kind of unpack things this afternoon, it's not the $2.1 trillion headline. I mean, we are in the world now of, instead of talking about tens of billions and hundreds of billions, we're talking in T's now. We're talking in trillions, which is just insane to think of where we're at in this world. Also exciting, right? I think what got me excited was this guy Juan and the Juans of the world, and the other, 4399 other people just like him. And I relate and resonate to their stories. SpaceX created 4,400 millionaires today. One big shout out to Elon. Like, anybody in his world seems to get wealthy. Anybody investing alongside him, anybody investing in his vision and working with him seems to get wealthy. So I'm whether you like him or not, whether you agree with his politics or how he says and does what he does, his lifestyle, I can separate all of that and just go, like, the value this man brings to the world and humanity is a net positive, in my opinion. And those 4,400 people are not C-suite individuals. They're not executives. They're not founders. They're not sitting on his board. They're not early, private equity shareholders that got access to pre-IPO. These were welders. These were project managers. These were technicians, machinists, cafeteria workers, launch crew members. I mean, the list goes on and on. These were hardworking people who bought into a vision, who dug into their role and decided to bring value consistently every single day. These people showed up every single day, and they helped create the vision of building rockets and building the SpaceX vision together collectively. Around 400 of them, 400 people, are now sitting on stakes. Listen to this, over $100 million each. So of those 4,400 people, 400 of them are now decamillionaires. No, sorry, centimillionaires. And here's the context that blew my mind. Google's IPO created roughly 1,000 millionaires. Facebook's created around the same. SpaceX just did more than 4 times that amount in a single morning. Pretty amazing. Now, here's, what I'm taking away from and breaking down from Juan's story and where I think it matters to the average person and some of these lessons, right? There's so many great teaching moments around us, and it's our job to extract those and figure out how they impact and apply to our worlds. And whether you're a real estate investor, whether you're a business owner, you're an entrepreneur, you're a stock investor, you're a crypto trader, whatever it is, right? You're just somebody that's trying to figure out how to build wealth and make a better life for you and your family. Hey, what's up, guys? I'm so excited to announce if you are an investor looking to generate consistent passive income, then I've got something for you. I just launched the Imagos Income Fund. It is a private investment debt fund. So instead of relying on long-term appreciation or big exit events like most real estate syndications do, we decided to keep it simple, focused on first position asset-backed lending, just like a bank, meaning your investment is backed by real collateral and structured to produce income from day one. The target return, 10% paid out annually and also paid out monthly. So no guesswork, real passive returns, true mailbox money. And because we're in the debt position, not equity, we're able to prioritize downside protection, maintain shorter durations, and stay in control of the risk, which is most important in environments like this. This is built for investors who want steady cash flow, strong capital preservation, and real asset exposure without the headaches of owning, managing, and waiting years for a payoff. So if this resonates with you, if you want to learn more, I put together a full investor presentation breaking everything down. All you got to do is just text the word income to 844-447-1555. That's income to 844-447-1555. I'll send you everything so you can see if it's a fit for your portfolio. There are 5 principles that I kind of boiled down and pulled out of these stories that I think are worth bringing some attention to. Principle 1, take equity over comfort whenever you can. And we've seen this in Juan's story. We've seen this in all the other people that took, that similar type of structure. I mean, we've seen it with the Facebook janitor and the Facebook artist. And we've seen and heard this story many a times, right? Where, hey, I can pay you now, or we can give you opportunity to be invested in our company, to give some sweat equity, and we'll exchange that for some payout down the road and you can get some shares. Well, Juan could have taken a higher base salary somewhere else, and he chose the rocket company's offering of that stock. That decision to prioritize ownership, owning something instead of transacting, ownership over a bigger paycheck, is the single most important financial decision that he ever made. There's a really cool kind of, soundbite of him talking about him being an immigrant, coming over and just having the, kind of mindset instilled in him that hard work, discipline, consistency pays off over time. And look where it got him. I mean, how many times have people that we all know, maybe it's you, chosen, I know I can relate to some of these. I've had those moments in my life where we choose to stay safe. We choose the safe option versus the potential upside because it's too far away. Now, I'm not saying like quit your job. I'm not saying, to do things that put you in a tough financial position. But I am saying is the crock pot over the microwave always wins. The short-term gratification of getting what you need now versus the long-term gratification, if you can wait, is something that time and time again shows to pay massive dividend. Now, principle 2, bet on the operator, not just the product. Here's what people forget. In 2015, when Juan went full-time, SpaceX had already nearly bankrupted Elon twice. The Falcon 1 failed 3 times before it ever worked. The company almost didn't survive, and he almost didn't have a job. But if you looked at the track record of the operator, and he said this, I was betting on Elon. He was betting on the operator, the leader of the pack, the leader, the vision, the relentless execution, the track record. That was a risk, an asymmetric risk that he was willing to take based on those things. And those are things that we should be thinking about and taking into account when we're looking at decision making, whether it's investments, it's decisions in your career, it's decisions with relationships, your partner in life, whatever it may be, right? Is you really have to not only think about the immediate decision of what you're going to be giving and buying into, but you have to think about who you're buying into it with. Who are you in the trenches with? Because on paper, everything could look good. But if you don't believe in the person, you don't believe in the vision, you don't believe in their track record, right? Then it ain't going to pan out well. And he wasn't betting on rockets. He was betting on Elon Musk. And that same principle applies to really a lot of the investments that you think about making today, right? Relationships, companies, who you're deciding to spend your time with as friends, whatever it may be, right? Don't just look at the deal. Don't just look at the stock. Don't just look at the business model and what's on paper and what's on surface level. You got to look at who the horse is that's running around the track and whether or not you feel comfortable jockeying up with that individual, because that makes all the difference. The best jockey in the world isn't going to win the race if you don't got a good horse. Principle 3, consistency beats timing every single time. Juan didn't try to time it perfectly or, as investors love to say, buy the dip, right? He didn't wait for, quote unquote, the right moment in life to smack him upside the head. He decided that he was going to buy in, and he stayed there doing what most people can't do, doing the slow, smart, consistent, boring activities over and over and over again. And that's often what you have to do, right? Is you have to do things consistently over a long period of time in order to really look up eventually and look in the rearview mirror and be like, man, I've actually covered a lot of ground. Wow, I actually have a lot to show for in the ground that I have covered. Set it, forget it, let time do the heavy lifting. Don't try and make it happen so fast. Because I know if you're like me, while I subscribe and have to kill myself to, opt into the crockpot mindset, the millennial in me who is used to clicking buttons and getting fast results and seeing really quick hits of dopamine, I have the microwave mindset as a default. I want it fast. But I've trained my mind and my brain over time to know that the functions and the disciplines of real quality outcomes, they come in the crockpot, right? They take time. And so let time do that heavy lifting. That is what Juan did. Now, principle number 4 that I was able to kind of pull out of this was, you don't have to be the Elon to win. Like none of us, very few people on planet Earth are going to be the Elon. Very few people on Earth are going to be the trillionaire. I mean, I think I saw a stat that said Jeff Bezos, if you have $1, was it $1? Or if you have a 6-figure net worth, you're closer to Jeff Bezos than Jeff Bezos is to Elon. And when you think about those types of people, not many of us are going to be those individuals. As much as I want to be that person, and I'm not going to, rain on anybody's parade and say that they can't be that person. There are just some people who got it. They got the sauce. They are him. They are her. They got it. Most people aren't. And you don't have to be the founder to win. You don't need to be the Batman. A lot of people can be the Robins. A lot of people can be the supporting cast. And that's a perfect example of what Juan did. We live in this culture where everyone glorifies being the entrepreneur, the founder, I built this from nothing story. And yeah, that's great. But Juan didn't found SpaceX. He welded the rockets. He was early. He brought value. He was consistent. He stayed in the game. He kept buying. And today, now he's a multimillionaire. And that's a perfect example of, you don't need to start the company to be successful. You don't need to be the leader of the pack to have a beautiful life, to get wealthy. You just need to find the right person, the right team, the right company, the right opportunity, and just to be able to partake and have a little piece in that vision going forward. Now, principle number 5, patience is the most aggressive wealth strategy on planet Earth, and it is the hardest one to abide by. I always think of Einstein's, he always said the eighth wonder of the world is the compound effect. And the compound effect requires patience. It requires continuity. 10 years, Juan held for 10 years through the failures, through near bankruptcies, through moments where quitting would have been the rational move, going and getting another job that maybe felt a little bit safer. Warren Buffett said it best: the stock market is a device for transferring money from the impatient to the patient. And if you're an investor, you can probably relate to that in some capacity, where you've either sold too soon, or maybe in your personal life, you've made a rash decision too quickly that you could have maybe wait out and play out a little bit longer. Well, today, the 4,400 SpaceX employees who decided to be patient and wait were rewarded significantly. And I commend them for that, right? And by the way, some reports are saying one stake is worth over $1 million today versus the 880. Either way, the man who welded rockets for $28 an hour and became a millionaire, probably going to be a multimillionaire as this stock, as he continues to hold, this stock continues to go up. Pretty awesome. Big shout out to him. Big shout out to all the people that participated in this. I'm sidelined. I did not participate in this. I had an opportunity to get in the pre-IPO too, and I wasn't in a liquid position to do that. So kind of kicking myself a little bit on that one, but hey, you don't win them all. But all right, now this is, where I think it's important to kind of take a little context, wrap things up. At 2.1 trillion on day one, SpaceX is trading roughly at, 140 times revenue. That's an extraordinarily high valuation. This is where I'm going to get to where do I think this is going to go. Long term, it's going to crush. It's going to be worth way more. But short term, I think there's going to be better buying opportunities in the next 3 to 6 months versus where it's at today. It's always euphoric. It's always exciting. There's generally blow off tops when it comes to these IPOs, and especially one as publicized and as, high profile as this. Trading at 140 times revenue is wild. This is an extraordinarily high valuation. Just to justify that price, SpaceX needs to successfully execute Starship at scale, dominate global broadband through Starlink, and potentially build out the Mars mission as a commercial enterprise. Now, that's just a few little things, right? No, that's a lot of shit that they got to figure out and execute and get done well. But if anybody's going to do it, it's going to be them. But I think it's going to take some time. There's going to be some bumps and bruises along the way. There's going to be some pullbacks, some flush outs. So, the IPO pop really is for the institutions, the big players. And this is where retail gets, caught holding the bag, and they end up being exit liquidity. They pump it up. Institutions, they sell into retail based on all the hype and all the euphoria and all the attention that's on it, right? They get caught buying it at high prices. Stocks pull back. They find their bottom. And what do those investors do? They take those profits and they reinvest in dollar cost average down at a much lower position. Here's the thing about most investors right now. They're consuming a ton of content, but they're not actually more informed. They're reading all the headlines, they're watching the tickers, they're following all the noise that mainstream media wants you to follow. And at the end of the day, you're still not informed on what it actually means for your deals, for your portfolio, or for your next move. So if you're listening to this right now, I don't think that's you. I think that you actually want to understand what's happening, how it impacts your investments, what you should be doing going forward, what you shouldn't be, and not just reading about it. That's why I decided to build the Wealth Intelligence Brief, a newsletter sent to you 3 times a week directly to your inbox, where we cut through the noise. We send you the macro data, the real estate intel, crypto signals, and all the unfiltered takes in 5 minutes or less for free. Eliminate the noise, keep the edge. Sign up by texting the word WIB to 844-447-1555. That's WIB to 844-447-1555. So I think you can have that opportunity too. That's my plan. The banks, the early investors, the funds who are allocated, shares at 135, they already made 19% or 20% today. When retail investors rushed in day one, chasing that momentum, that hype, that euphoria, and they're often buying the exit that smart money is selling into. So just keep that in mind. Keep an eye on this. The real buying window in high-profile IPOs generally, it usually comes based on data and history, 90 to 120 days later, when the employee lockup period expires and people like Juan start taking some profits, or big institutions after their lockups expire start taking some profits. That's where some of that selling pressure, more of that supply, creates a dip and a pullback in price. And that dip is often where patient investors find a good entry that they feel good about, right? So I'm not saying don't buy SpaceX. I'm just saying don't get FOMO'd into buying at the peak or as this thing climbs over the next couple weeks. Do your homework, know your thesis. Obviously, if you're going to hold this long term, just find a good entry position. And look, the stock market, especially this IPO, we're on a pretty wild run and it's pretty inflated right now. So I would imagine that at some point in the future, there's going to be some great buying opportunities. And this would be a good stock to potentially hold in your long-term bag, in your portfolio, if this is something that you believe in. So what do I think? One, based on those 5 principles, think about where in your life you have the opportunity to take equity over a paycheck right now. That might be a side business, that might be a real estate deal, that might be stock options at your company, right? Look at who you're betting on in your investments. The deal matters, the asset matters, but guess what? The operator, in my opinion, matters more. I know a lot of opportunities that look great on paper, they make a ton of sense, but without the right operator, without the right team, without the right leader, right, they fail. So find your Elon, the person with an obsessive vision and a track record of figuring it out. Get into their world, bring value to them if you're not going to be that Elon yourself, right? And if you don't already have systematic, consistent investing strategies, a plan, disciplines, frameworks, whether that's real estate, stocks, both, right? Like I've got really clear criteria for what I will and want to invest in real estate. Now I'm getting that a lot more refined in my crypto. I'm getting that refined in my stock portfolio. Like these are things that are extremely important to make sure that you've got strong systems, strong frameworks, and disciplines that you can just abide by and execute in. And if you are, somebody that is planning on buying SpaceX, just be patient and think about where your right entry is at, and maybe get some good advice from other smart investors and people around you. So, just wanted to break that down, wanted to bring that up. I thought that was a really cool story today. I love seeing people win, to be honest. I want to see more people build wealth. These are great stories when you hear about, people like Juan and 400 other people like him in a company that bought into a vision, worked their asses off. This didn't happen on accident. So really cool. Big shout out and success to all the people that are a part of SpaceX. They happen because people made a decision to bet on a vision, show up every single day, and they didn't sell out and quit when it got hard. And that's one of the hardest things to do, is to not give up. That's the playbook, and it's always really been the playbook. So hope you guys enjoyed today's episode. I'm curious if you invested in SpaceX, what your thoughts were, what you're paying attention to. And guess what? We got a couple more crazy IPOs at crazy valuations. I think they only tried to raise $75 billion on this one. I believe OpenAI and Anthropic are both going to be aiming to raise another $100 billion each. So that's another $200 billion in liquidity that's going to get sucked up into these companies. And this is wild times we're living in. But hey, it's a great time to be an investor. Be smart, be safe. As always, keep investing in yourself and your wealth on your march to $1 million and beyond. We'll see you guys in next week's episode. Cheers. Well, that wraps up today's episode. Thank you so much for tuning in. As always, you guys know this show would not be what it is without you, the amazing listener, the support, sharing this out with other people who can gain value from it, taking 60 seconds to leave a review. If you haven't done so already, those things mean the world to us and ultimately help us spread this message out to as many people as we possibly can to help them on their wealth building journey. If you have any particular links or resources that you're trying to track down that were mentioned in this interview, be sure to check out this episode at millionairemindcast.com, where you can find access to all that information. And of course, if you haven't checked out the Wise Investor Vault yet, be sure to head over to wiseinvestorvault.com to check out all the tools, all the resources, the checklists, the spreadsheets, the trackers, all kinds of amazing things that can help you on your wealth building journey at thewiseinvestorvault.com. If you haven't connected with me on social media yet, I'm consistently putting out more content, stories, value to help you on your wealth building journey. And one of the best and most exciting things for me on a weekly basis is getting to connect with you guys. Getting your DMs, hearing what things impacted you, what you need help with is a big way that we continue to drive the content for this show. So if we're not connected and following each other on Instagram, on social media at official Matty A, give me a like and a follow. Would love to connect with you there. And of course, don't forget to get on my deals list. If you're an accredited investor, you want to look at more deal flow. You want to see what deals I have access to, what deals I'm raising capital for. This is an exclusive list that I only put out to my accredited investor list, my Millionaire Mindcast family. So text the word deals to 844-447-1555. And with that being said, thank you again so much for supporting the show. Until next week's episode, keep investing in yourself and your wealth on your march to $1 million and beyond. Cheers.